All right, so let's get started. Welcome to the crypto market update. We're about to do just a top-down analysis of what happened in equity markets as well as what's happening in crypto markets right now. I think one thing that was really interesting yesterday was as BTC came into this high right here, yesterday did not take out the high of May 19th, and it did not take out the high of right here, which is May 15th, right? And that was interesting because if you actually look at the ES, okay, the ES actually took out, see yesterday, this was yesterday, right? It took out the high of the May 20th high and the May 19th high, okay? And this is quite fascinating because guess what? ES is still obviously range bound, but it's now coming back down inside this previous range high that we established from May 18th. Whereas BTC, not only did it not take out those May 19th and 15th highs, we're now sitting at the low end of the range. So what does this mean? Well, it implies that there is still relatively overall weakness, especially with crypto assets or risk assets, if you want to call them that. There's far more risk right now and far more faster de-risking happening in the crypto landscape than is, say the indices or US equities. Okay. I think, the US equities, for the most part, they did okay yesterday, right? Nothing too terrible. You can kind of see they're still kind of trending up. Obviously, overnight, a lot of them dropped hard. You could kind of see AMD is actually having a gap down open. You can see right now, here's the US markets opening right at this minute. Let's check out some big dogs like Microsoft. Here's the gap down again, same thing with Microsoft, right? Overnight session, pulled all these things down. Google, pretty big drop actually. Wow, this is actually a very big drop. This is a almost 6% drop. Yikes, that's not good. Google dragging down the indices is going to weigh a lot, on markets overall, right? Because Google is such a massive part of the S&P 500 index. Same thing with like Tesla and Microsoft and Apple and stuff, right? These big, bulky assets that are going to weigh a lot on the indices, they can really drag down the entire market. And one of the ways to sort of visualize that is you can do S&P 500 list right there, and you can do FinViz. Okay, these two little tools help you quite a bit to recognize, what exactly is sort of the weighting of these assets. Okay, as you can see, the big dogs, Apple, Microsoft, Amazon, two different classes of Google shares, and then, Berkshire and Tesla, right? When these top 5, top 7 assets start to tick down on the day, they're weighing heavily on the indices. And when the indices go down, right, that is the tight correlation that BTC has with it. You guys know very well, I had shown y'all this Bitcoin correlation chart with the, where is this? Right there, okay? You can kind of see this correlation chart that Bitcoin has had with the NASDAQ 100 for the last, several months. Pretty much the first half of this year, we've been tightly correlated with NASDAQ and the US indices. So that should kind of tell us that, it should ring us some warning signs for us. And then of course, if you kind of go to the heat map right here, oh, it's not loaded up yet. But point is, once you start seeing all this heat map start to turn red, along with, the indices starting to tick red, you should almost expect that BTC and crypto is going to start breaking down further and further, okay? So for now, obviously, it's the first couple of minutes of the US market open. Let's see how it pans out, if we're going to get a nice boost up in the market or if we're going to, get smacked, back down in the market. Now, if we do get broken down again, I think the most sort of obvious level, let me turn these alerts off that I have. Okay, I think the most obvious level that I would figure BTC is going to target is these lows, right? $28,560 or something. Okay, so 28.5 is the first level that I would figure BTC is going to target. Now, does it break, and smash right through it? I have no idea. Does it, come back and reclaim this level? If so, then who knows? This could be left behind, and then this thing could target, mid-range or the high of the range somewhere up here at these highs where liquidity was left behind. All right. Now, past few days, I mean, trading has been really tough, as I mentioned to y'all. In the 5K account, we're having a pretty challenging time, but challenging time doesn't mean that we have to keep forcing trades. I've told y'all before that sometimes you just need to take 24 hours, 48 hours of a break to realize, like, okay, what exactly is the market doing? Can I regain my confidence in the market? Put on smaller trades, get some smaller wins under your belt, and then you can start sizing up again. Okay, so as of right now, I'm kind of just in that break mode because I had 2 or 3 losses back to back, which again, I had showed y'all, transparently. And I don't quite want to, have my confidence sort of broken again so fast. So I'm just going to sit tight, wait on the market and see what it gives us. Now, if I were to look at the market right now and you ask me, well, is there any position to take? I'd probably say, yeah, you could get short now. You can have your stop above this high. It might get rated once, but maybe, you can also add to this area and have your stop somewhere deeper up here, like 29.7 or 29.8. And then also, take this trade back down towards these lows that I had spoken about right here, which is 28.5. If you want a deeper target and you believe that the market's going to break down significantly, I think the easiest way to look at it is you could say, well, look, on a daily basis, I mean, this looks weak. And I agree with you. This looks really, really bad, right? This is like a clear sort of, bear flag looking scenario right now where I don't see, this thing resolving, to the upside, at least not anytime soon. Okay. On a weekly basis, there's a couple of different targets that you can pay attention to. On a weekly EMA, which is this black line, the weekly EMA is currently around 27,000 flat. Okay, so that could be your target to the downside if you are thinking about getting short. Now, the 200 MA, so the simple moving average right there, right, that has historically sort of helped us in weekly charts going back to 2015, right? In the same way that EMA has, the MA is also just as helpful in my opinion. And the MA is that yellow line that you could see, right? You could kind of see right here, catches us as support in 2015. Right here, we bounce off it in 2018 and 2019, bounce off it here in 2020. And now we have yet to bounce off that level, which is currently around $22,000. Okay. Now, let's just say if BTC drops from here down to about 22,000, that's about a 25% drop. That's pretty big, right? A 25% drop in Bitcoin, I'll tell you right now, all right, a 25% drop in Bitcoin is probably going to mean at least a 35 to maybe 45% drop in altcoins. Okay, so this is the total to market cap, right? Total to market cap kind of gives you an idea of, where we are contextually in the chart. And from here, if you could kind of see, right, the same way BTC took out these lows, see these lows right here from 2021, even these lows right here with this wick. The interesting thing to me is that we have not done that in the total to market cap right here. So if we were to break down further, let's just say sweeping all these lows, all right, well, where does that put us from the current price action? Well, from here on the way down, at minimum, we're dropping 15% hard in total to market cap. Again, total to market cap is just altcoin market cap, excluding BTC. Now, personally, I don't think 15% is going to be enough. I think it's going to be a bigger smack, for a lot of these alts. And it could push prices down, I don't know, maybe down to the $400 billion level, or maybe even lower, somewhere around 350, 375. Okay. Doesn't necessarily mean that we're gonna, just spend weeks and months down here. Who knows? Maybe it could be like something like this sharp, pullback recovery, and then we just like range like this higher and higher over the next several months, right? It could be something like that, similar to what happened in Bitcoin back here in 2018 when we had that drop. We had a very sharp drop, and then after that, we just consolidated higher and higher with these higher lows, right? Almost 3 to 4 months after that. And then we started a new run in the market. Again, new run did not mean we started a new bull run. It just meant that we were kind of mean reverting the market back to something more or less fair value. Now, obviously, the larger guiding hand in our crypto markets right now is how US equities are doing, the overall sentiment in the market, and then of course, regulation and things happening outside the crypto industry that's just not in our control. So for example, Morgan Stanley, they kind of did a report about regulation and impact on crypto. Both the Democratic Party here and the Republican Party here in America, they're all about crypto regulation, especially after that Luna debacle that happened 2 or 3 weeks back. All eyes are on crypto right now, and regulation is inevitably coming, either in a strict way or in a subtle way. It's coming, right? And it's probably going to hit stable coins at some point. Now, people keep arguing about, well, is USDT going to break down, and are we going to have like a crypto winter in a sense? I'm not really, first of all, I'm not that familiar with how USDT is good or bad. I do think that, yes, it could be troublesome, but if you kind of look at the last several, months or years of USDT market cap, it has been continuously growing, right? And even over the last couple of weeks, when that Luna debacle happened, there's a lot of redemptions that happen in USDT. If you look at this from the high to the low, you could see right there, that figure, it's saying about $7 billion of USDT was pulled out of the market cap, okay? That is pretty damn good, given that if you look at USDT, okay, USD, right there, we only had one little spike down that quickly got recovered back to that dollar pegging, right? I think that's pretty good for USDT. I know people have tried to question that, numerous times over the career. Again, I'm not smart enough to realize if this is a scam or not. I personally think USDT is pretty legit, but we also thought that Luna or UST was going to be legit, and look what happened there. So we'll take it with a grain of salt. We'll say, okay, yeah, it might be fallible, but again, I think it's far more stable because it actually has direct dollar, commercial paper backing, right? USDT is not backed by Luna or Bitcoin or Ethereum to stabilize the peg. USDT is actually backed by actual US dollar reserves. And that is far different than having an unstable or speculative asset like Bitcoin or Luna or ETH. Okay, so I kind of want to leave that argument behind us for now until we start seeing significant risk develop. Ethereum, also again not really looking good, looking like it wants to sweep last week's low, which is around 1900 points, and then the previous week's low, which was around 1701. So we'll have to keep these levels in mind as the prices start to show weakness continuously. I think similar to BTC trade, right? If you want to get short on Ethereum, I think it's the same trade, right? You could get short now. You can have your stop above this week's high, first target profit, last week's low, next target profit, the weekly low from 2 weeks ago, right? Around 1700 points. Now, I took a little poll just a couple of hours ago asking people about, what do we think that the historical drawdown is going to be this time around in 2022? Because 2018, Bitcoin went from, or not Bitcoin, Ethereum went from 1,400 to 80. 2020, 300 to 90. 2021, 4,000 to 1,700, right? 2022, I don't know. I really don't know, honestly. I personally think it's going to be somewhere between 1,000 and 750. But again, I'm just saying that because historically, right, altcoins themselves, and Ethereum is obviously a far more superior altcoin. I think it's a class in its own, but nonetheless, anything aside from Bitcoin has gone down 90 to 95% in previous cycles. And to be honest, it's not like Bitcoin also has survived that well, right? In terms of bear markets. I mean, here's the historical cycles of Bitcoin. 2013 to 15 bear cycle, it went down almost 86%. 2017 to 18 bear cycle, it went down 84%. This time around, if we were to sort of take a 80 to 85% average for BTC from the high to the low, we're looking somewhere between $10,000 approximately, or $10 or $11,000. That seems right now insane to even talk about, right? I get it. I mean, we don't ever want to think about BTC having the ability to go down 80 or 85% every single time a bear cycle starts. But, we do have sort of past precedent of bear cycles where assets within the crypto space do get hammered pretty hard. And honestly, like, I don't really blame people to think in similar context of what's happening here. But if that were to be the case, well, then where would Ethereum go? Well, guess what? Ethereum, here in 2020 went down at minimum 70%, right? In 2018 bear market, or 2018 to 19 bear market, it went down 94%. So let's just say we pick somewhere in the middle, right? Between 70 and 94. So we pick like, say, 80 something. Okay. Well, from high to low, let's just say 80%. Guess what? Ethereum comes to about $965,000 or so. So like I said, my thought of this poll would be somewhere between 1,000 and 750, right? So I don't really know exactly how things could map out over the next few months. What I do know is that the Fed, the governments around the world, are really trying hard to clamp down on inflation, get people back to jobs. Basically, they are willing to sort of destroy parts of the economy and parts of asset markets, whether it's crypto or stocks. They're willing to destroy that as a consequence to fix inflation. And I think they will do that until that actually happens. Until we start seeing inflation sharply roll over, I think the Fed and the governments around the world will probably take a hammer to these markets. And the markets themselves are kind of doing sort of the dirty work for them, because investors right now are very, very paranoid of how much further the market could fall. And if you're getting long in the market, right, say as an investor or as a hedge fund, now, unlike back in the day where you could go long in the market because things are cheap, this time around, it is now posing real career risk, because majority of funds and institutions are already down, 30, 40, 50% on their portfolios, right? That's quite a bit of a hammering, from year to date. If you take another big hit or another big risk, you better be able to justify that in a big way, or the market better turn around in a big way soon if you're going along in the market, or else you're going to get fired. Your investors are going to be pissed. They might actually sue you, or your fund itself might shut down. You might be out of a job, right? These are the things that are posing real career risk for a lot of investors and traders around the world. And that is quite significant. So that's why I kind of see the market sort of bleeding the way it's bleeding, because almost everybody's scared to bid. And I don't blame them, right? When you have so many macro forces like the Russia-Ukraine war, like inflation, like interest rates rising, like political turmoil happening around the world, supply chain issues, gas prices being at all-time highs. When you have all these external issues with so much uncertainty of no real resolution anytime soon, markets strongly dislike uncertainty. And, when they dislike uncertainty, they start trashing some of these assets, because what you're really doing is you're starting to sell to basically be able to de-risk and start taking money off the table, so you and your clients and your fund can be a little bit more secure, right? That is really the overall goal for funds, is to not be able to take too much risk at a time of massive uncertainty, because you might get fired, you might lose your job, your fund might shut down, you might get sued, things like that. Okay. So anyway, that aside, right? Metrics overall also still don't look good. I was kind of looking at, sort of delta for Bitcoin and Ethereum and Solana, like the top assets. And honestly, it doesn't still look like, the market is ready for bottom. It looks like we bounce and then we float sideways and then we just start grinding down again. And, this kind of goes similarly for something like Solana, which is, one of the more favored assets in crypto space. Solana is not like your average, like Dogecoin or Ape token or GM, that step in GMT, right? Solana has real utility, real community, tons of volumes, tons of developers. And it's a real ecosystem, right? But even Solana has been getting completely hammered, top to bottom. And Solana, I think, is down, I want to say, let me see here. Solana is down from the highs. I think it's down like 65, 70%. Oh shit, no, I'm wrong. It's down 82%. Let's just say we took an example of, what I showed you all about Ethereum, right? In 2017 and 18, when Ethereum went down, it went down like 95% or something. So where does that put us? 94 to 95% puts us somewhere close to $12 to $10 for Solana. Again, I know those prices sound ludicrous, but remember, when we were trading at 250 or 240, we also thought it would be a dream to be able to buy Solana at $50. Well, now that we're here, almost everybody's like paranoid to pull the trigger. And I'll be honest, I am too. Guess what though? I took my shot earlier this weekend, right? I took my shot at around 50 and some change. We rode it to like 53 or so, and then I cut because we started to go down. I took a little bit of profit on the Solana spot, but I lost money on trying to get, net long in the market because I thought that, oh, well, things look, aggressively oversold. Maybe we're going to, put in something like this, boom, pop up. Nope. Market said, no, thank you. We got too many sellers to get out of the market. We just came back down real quick. And here is Solana right now breaking down in real time, right? Solana might take out this low from basically last Friday. And if that does happen, well, then now you've printed, consecutive lower lows, right? And lower lows effectively, once again, means just that you're now part of a new downtrend, okay? Same goes for BTC, same goes for other assets in the crypto market. Okay, it has been very tough to be long on the market for more than 24 hours, right? And that should tell you like the overall weakness that we have to deal with. I'm not someone who keeps saying like, well, we have to be short or markets are going to zero or anything. I'm looking for opportunities in the market to get long and take that mean reversion trade back up. But damn, like we get barely 24 hours out of it before the markets roll over. And that just tells me like, maybe I should just not long. And if I'm not going to short either, then it's better to just sit tight in cash, right? Instead of just chopping yourself to death. It's like if you don't have big trades that blow you up, you might have the whole, death by 1,000 cuts, right? And death by 1,000 cuts feels much, much worse because you just feel like you've lost all confidence, all read in the market. And it's exhausting, okay? I've been there many times in the market before, and I've been able to bounce back only because I know when to take a break. I know just when to stop, right? And sometimes you jump back into the markets and you keep making mistakes, but as long as you don't blow up your entire account, as long as you're able to survive through these bear trends, and personally, I really do think the pace at which we're selling off in this market, I would not be surprised if all this stuff resolves by, I don't know, end of this quarter or maybe like the first half of next quarter, because we've dropped so hard, so fast across the markets. I would figure, yeah, we might have another drop in us, right? We might have a severe drop in us, but that doesn't mean that, we cannot sort of build a large base over the next, coming months. And if we could build that large base, that would give markets enough time, the Fed enough time, the economy enough time to figure out, what the positioning is. And that could mean a resolution to the Russia-Ukraine situation. It could mean a resolution to interest rate hikes. It could mean a resolution to, not having a recession anymore, right? All these things, sometimes it's just about time. It's about waiting. It's about figuring out how to make that uncertainty become a little bit, focused into clarity. All right, metrics wise, like I said, I still don't see a lot of order book depth. So liquidity is pretty sort of thin, even in BTC, even in ETH, I was checking out. It was very, very tight across the board for Ethereum and Bitcoin and Solana. So I've kind of been checking out these assets on a day-to-day basis. It just seems like there's still a lot of spot sellers in the market. And when spot sellers are selling, that means that there's actual selling, actual de-risking happening, right? It's not just long positions and options contracts closing out. This is like real sort of sellers coming in. They're saying, hey, shit, we got to get this stuff off our books in case the environment gets worse and worse, right? So it is definitely a little bit scary. Open interest wise, right here, looking at Coinalyze data, nothing too special in the data. I mean, RSR had a big pop in open interest. Don't fall for this, by the way. This is open interest starting to come down. Price had already popped a significant amount for RSR. So don't pay attention to this as, oh well, if open interest is high, maybe this is going to pop up again. I don't think so. I think we're already past that. Okay. I think who is it? Light Crypto had said something about Tron, and again, very smart guy. He's been sometimes a bit too early in the. He's been a bit too early in the market, in the trend, in the momentum reversals, but he has some good points about the case to long TRX, which is that he believes that there might be some sort of lack of correlation that Tron has versus Bitcoin and Ethereum and AVAX. Obviously, you could kind of see over the past several months, right, or several weeks rather, Tron has actually stayed at a relatively decent elevated level versus Bitcoin or Ethereum or Avalanche or Solana. And that is something that you should be paying attention to. But again, I'm not a big fan of Tron. I don't want to long it in this market. I had pointed it out a couple of times, but I just wanted to let y'all know that this is a thought process that people are thinking, just in case people still want to play that stable coin interaction with a token like Tron. All right. Let me see here. We talked about the S&P 500 list, the map right here. Correlation. Let me see if there's anything else on my Twitter feed. All right. ANC. So I had mentioned ANC yesterday. If y'all watched my video, ANC had a very, very nice pop, literally like after we spoke about it in the video yesterday. ANC was trading somewhere around here, around 25 to 28 cents, popped up in a big way, almost doubled in price, and now basically starting to roll back over all its gains. So I personally think that ANC is going to just, keep heading down further and further. I think this was probably either a short squeeze or just to bait a bunch of buyers up here so the market makers and big players could get out. So do keep an eye on this as a trap. You can get short in ANC, but also anticipate this thing can pop up, another little bit way the heck up here, right? And then start to roll over. And these, volatility movements are very sharp. Popping up 50, 60%, you might panic out of your position, right? And so you have to keep in mind your sizing in accordance to volatility of how much the market can move. All right, cool. Are there any other questions? Anything else I can cover? Okay. All right, well, that's pretty much it, everybody. Let's keep an eye on the market. I will, of course, let y'all know on the advantage side of, what my other thoughts are, what I might, want to start picking up in the market or what I might want to start shorting. I will let y'all know. All right, good luck. Take care, everybody. Cheers.